Get ready, Staten Island.
The Ferry Hawks are back at SIUH Community Park July 7th to the 12th for a 6-game series against the High Point Rockers. Tonight, first pitch is at 6:30. It's Thirsty Thursday with $5 Bud and Bud Light drafts. Friday, July 10th, first pitch is at 7 p.m. May the Force be with you on Star Wars Night with post-game kids glow around the bases with special lightsaber training packs.
Visit ferryhawks.com now to lock in your seats.
When it's time to scale your business, it's time for Shopify. Get everything you need to grow the way you want. Like, all the way. Stack more sales with the best converting checkout on the planet. Track your cha-chings from every channel, right in one spot. And turn real-time reporting into big-time opportunities. Take your business to a whole new level. Switch to Shopify. Start your free trial today.
We got 2 stars, Nancy Tengler, CEO and Chief Investment Officer, Laffer Tengler Investments. And her latest book is The Women's Guide to Successful Investing. And David Bahnsen, the Bahnsen Group's CIO, founder and managing partner. And he also is the author of DividendCafe.com. And he's got a new book coming out, Profit from the Profit, the past, present, and future of dividend growth investing. Coming out in late August. What happened to the book on work, for heaven's sakes?
Well, it's still there, my friend, and that came out about 2.5 years ago, and I've had a very fun time talking about that book, but it was time to talk about dividend growth again because that is the work I do. So they kind of follow each other.
I like the work thing. I mean, not that I don't like dividends, but I like the work thing. Work is godly. Anyway, work creates dividends. How's that?
That's right.
All right.
That's right.
We'll put it all together, Nancy Tengler. Nancy, by the way, we're going to talk about stocks, but I can't. David wrote a good dividend cafe on Hamilton. What is up with J.D. Vance? Okay, I want to wrap this again. J.D. Vance talking about Alexander Hamilton, who, according to Vance, I guess is a big government socialist spender. Milton Friedman's no good. Margaret Thatcher's no good. The meritocracy is no good. What do you think of that, Nancy Tengler?
I think he just saw the musical and didn't read history or the Federalist Papers. I was so disappointed by that. And yet it's consistent with his past. I mean, he's always been a poor man's populist. I grew up as a poor single mother's populist, I guess, but it was very easy to understand the power of capitalism, of Milton Friedman's policies and monetarism. And so this, and Margaret Thatcher, actually Art invited me to a lunch with her. And we happened to be wearing the same Kelly Green outfit. And so I was in every picture, but she is one scary woman. When asked a question, she would lean across the table. So I didn't ask any questions and she'd pound her fist, but she was right. And she lived it. She grew up above, the grocery store. This was a woman who understood economics. I don't think J.D. Vance has ever gotten it, and I think he did himself some severe damage, and then not coming out and correcting himself. I was very disappointed. That's
really important, right? He didn't even try to modify it at all. David, you wrote about Alexander Hamilton.
My fellow Americans, if you think you know politics, think again. I'm Michael Cohen, and every week on When You Know, we're pulling back the curtain on power, politics, media, and the people making headlines. On my new WABC radio show, you'll hear conversations from names that you know. People like Jerry Falwell Jr., Anthony Scaramucci, Alan Dershowitz, and many, many more. Maybe, just maybe, we'll even hear from the president. No scripts, no spin, just real conversations with people who were in the room where it happened. And trust me, we've got some very big surprises coming. Look, I've spent years at the center of politics, controversy, and power. I know the players, I know the stories, and now I'm bringing you inside. When You Know, Sundays at 5 p.m. on WABC Radio, and When You Know Unleashed, wherever you get your podcasts. Because with me, you never know who's going to show up.
Well, and it's funny because Nancy made the joke about he must have only watched the musical, but I think the musical portrayed Hamilton a lot more realistically than J.D. Vance did. I mean, look, Hamilton loathed populism. He didn't trust the masses to form economic policy. He believed that you needed principles. You needed rule of law, but you needed freedom. And then, as I talked about on your show the other day, Larry, Alexander Hamilton was our founding father who best understood capital formation. That to have a prosperous society, you needed one that could form capital, cultivate capital, and then deploy capital to its best and most rational use. And that's really what we got out of the Hamiltonian legacy. The principles of free enterprise were all throughout our founding, but they were connected to strong capital markets thanks to our nation's first Treasury Secretary.
That is correct. I mean, people may or may not forget, but The Wealth of Nations also came out in 1776, and the founders were intimately acquainted and familiar with Adam Smith, and some of them communicated with him. Amongst them, apparently, Ben Franklin talked to him, spoke to him, and when Franklin was ambassador to the court of St. James in those days, I mean, he knew Smith, and he knew all about the Scottish and English Enlightenment. So anyway, I think JD's got some work to do. Nancy Tengler, stock market still looks very strong. You know, some bombing in Iran didn't seem to get in the way this week.
No, and I think, I just wrote a piece on, directionally, we think the Fed's next move is down, not up. And if you look at the PCE numbers, core, but more importantly, cyclical versus acyclical. Cyclical's coming down. Acyclical, which is impacted by supply side shocks, is the one on the rise. But my most important and favorite metric these days is Trueflation, which is a number calculated by True Labs. So private sector, real time, 30 plus different sources, 15 million data points, recalibrated daily, and it shows Trueflation is well below 2%. So I think the market will ultimately catch up with that, but policy hasn't been super helpful because since the rate cutting cycle began, we've seen 175 basis points decline in policy, but the 10-year has gone from 3.9 to almost 4.6%. So the bond vigilantes are still alive and well. They're just maybe not as radical as they used to be. But I think you want to be long stocks and use the weakness this summer really to add to the productivity enhancers. That's been our theme for 4 years. Last thing I'll say is Anthropic came out with a paper, talking their book, but they utilized real data and models estimate that AI models alone will increase productivity by 1.8% annually over the next decade, and productivity's been rising 2% over the last decade. So when you add those together, even if the numbers are somewhat inflated to the high side, and you then add in physical AI like robotics and quantum computing and space, which is our thematic portfolio, you will have one of the great economic transitions in history, I believe.
Where's that? Where can people look at that Trueflation?
TrueLabs.com. I think it's .com. I can type it in and I'll let you know. But True Labs is the actual company, and they calculate Trueflation on a daily basis.
David, what's your take on this whole story? And what about this Trueflation thing?
Well, I've been talking about the Trueflation thing for a long time, and I think that what you've had is a couple of different extrinsic issues that people don't understand inflation as a monetary phenomena. And when you had supply shock with oil, there are certain select products that saw prices go up last year. But when you're talking about the overall money supply and broader inflation expectations, I just am a traditionalist about tip spreads, Larry. I think the tip spreads tell you with trillions of dollars of real people's real money on the line, market indicator. And what's interesting, Nancy's talking about the 10-year sitting between 4.5 and 4.6, and that's right. But it is also true that inflation expectations have come down within that, which implies higher real growth expectations. I don't mind a 4.5 10-year at all. I think that if you're going to have inflation at 2% and you can get real growth up to 2.5 to 3, which is where I'd really prefer it be. I'm one who still longs for the 70 years of over 3% real growth that we got from World War II to the financial crisis. I think if it weren't for taxes, regulation, and excessive government spending and a percentage of the economy and government that crowds out the private sector, I think we would get 3% real growth again. And so that the bond market capturing that, I would see as a good thing. But we have a ways to go, and there's a lot of questions right now as to where the productivity will come from, and is the AI writing checks that they're going to be able to cash? I'm optimistic about a lot of things.
So the real rate on the 10-year, the 10-year tips, which started trading in 1997, if I'm not mistaken. Robert Rubin was Treasury Secretary. The real rate is up 40 basis points year to date. It's very important. Yeah. And that shows higher capital returns, and that merges or melds exactly with the productivity argument and higher real growth. Now, on the inflation side, I'm looking at the 2-year break-evens, 2.01%. According to my stock sheets. That's the inflation outlook for 2. And the 10 years is not much different, 2.25, 2.25. And the tips inflation, let's see, let me look at this right. The 2-year break-evens down 29 basis points. So inflation expectations are coming down and growth expectations are going up. That's a pretty good combination, Nancy. I mean, that's what you want.
Yeah, well, sure. And by the way, trueflation.com.
Okay.
Yeah, and if you look at May, 1/3 of the contribution to CPI was stock market gains. So higher financial services or David's and my fees based on appreciation in the market. So I think we have to understand the inputs as investors and as Americans. I mean, you saw consumer spending hit a recent high, up 2.1%. You saw that in the last report that consumers were spending less on gas, but not cutting back on other services, transportation, which obviously would be gas, and food and energy or food. And so I think you have to look at it in toto, and that's why I long for private sector data, because the numbers that we quote so religiously are often revised dramatically, like the jobs numbers, for example. And some of them never get revised. I mean, you both remember, David and Larry, when we had to revise the jobs numbers, the non-farm payroll numbers, as overstated by 1.9 million over 2 years. They never went back and recalculated the productivity numbers. That would have meant productivity was higher. So we listen to the companies. We're hearing it across sectors. It's not just cost savings and time savings. It's improvement in product development, marketing strategies, advertising strategies that generate revenue. So I think this theme of AI is being underestimated. And don't listen to me. Listen to John Doerr from Kleinert Perkins, who said he thinks AI is underhyped. So, these are guys that live and breathe this stuff. John Chambers, this is the most powerful technology since internet and cloud computing combined. And it's just one of the many ways that I think some of these tech innovators are going to change the way we live. So I'm counting on self-driving cars, a robot, and among other things.
I'll never do a self-driving car. I'm sorry. I mean,
Well, when they take your keys away, you might.
I'm too old. It's just way too scary. But profits are the mother's milk of stocks. That's all I'll say. We're going to take a quick break. Nancy Tengler, Laffer Tengler Investments, David Bahnsen, the Bahnsen Group. I'm Kudlow. We'll be right back. And we're talking stocks. Nancy Tengler, CEO and Chief Investment Officer of Larry Tengler, and Dave Bahnsen, founder of the Bahnsen Group. He's got a new book coming out, Profit from the Profit, the Past, Present, and Future of Dividend Growth Investing. So, David, talk about dividends. Tell us a little bit about dividends.
Hey, it's Ryan Reynolds here from Mint Mobile. Now, I was looking for fun ways to tell you that Mint's offer of unlimited premium wireless for $15 a month is back. So I thought it would be fun if we made $15 bills. But it turns out that's very illegal. So there goes my big idea for the commercial. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3 months, $90 for 6 months, or $180 for 12-month plan required. $15 per month equivalent. Taxes and fees extra. Initial plan term only. Greater than 50 gigabytes may slow when network is busy. See terms.
I make two arguments in the book, Larry, that there is a big benefit to investors in receiving the dividend, and there's a big benefit in what you know about the company in managing their affairs to be able to consistently pay the dividend. It's sort of a social contract. It avoids the crazy M&A and vanity projects that get so many companies in trouble, I would argue, in a period where a lot of CapEx seems to be totally unhinged from reality. It avoids the CapEx that is not economically rational. It's a very shareholder-friendly way of managing capital allocation. But as you always point out, profits are the mother's milk of stock markets and the economy, and dividends only come once profits have come. So you're dealing with the ability to consistently grow and sustain profits, and it makes for a very healthy economic society, and dividends are a fruit of that labor.
Nancy, are you dividend sensitive?
Yeah, oh, yeah. We run a dividend growth strategy as well. My old partner, Tony Spare, developed a strategy called relative dividend yield that looks at a stock's yield relative to its own history and compared to the market. And I agree with David. I mean, management set the dividend based on a portion of what they think long-term sustainable earnings power is. So it becomes a powerful indicator. And we saw it most recently with Walmart, that went from raising the dividend a penny a year to a big jump, 9, 10, 12%, as they saw their earnings growth and same-store sales comps improve dramatically. And by the way, that was due to them pivoting to all the new technologies, digitization, robotics, AI.
And they're cutting prices.
We love it.
They're cutting prices. They got a shout out from Trump for price cuts.
Yeah, no, they're great. I mean, it's moved upscale. The Walmart in my neighborhood sells Veuve Clicquot, so it's not your father's Walmart.
That's wonderful. They have Hermes ties and a department. Just
not yet.
Not yet. Yeah, save that for Sam's Club. David Bahnsen, what's the Fed story? Is there a Fed story? Is there an interest rate story?
Well, I just am one who really believes it was fun to hear Nancy say it earlier, because I think that the view Nancy and I have is out of consensus, and I think we're right, and that is that the most likely next move is down, not up. I appreciate the way Warsh has handled things so far. I don't like the term task force, but then I see the concept behind it. I see the people on it, and I'm just blown away. I absolutely love what he's doing. I love getting rid of forward guidance. And I do believe that he needs to have a very strong focus on price stability. And yet I just do not believe that we are below the neutral rate right now here at 350, 375. I think that he is very unlikely to hike rates here in the months ahead. And I don't think that has anything to do with political pressure at all. I think that the president has given him a job to do, and I think he's going to do it.
Price stability means lower interest rates. Sorry, Nick Timiraos. Price stability means lower interest rates, okay? David Bahnsen of the Bahnsen Group, Nancy Tengler of Larry Tengler Investments. You're both fabulous. Thanks ever so much.
In the U.S., there's a break-in every 26 seconds. But when intruders step near, Simply Safe Home Security steps up.
Stop. This is Simply Safe. Police are on the way.
Using AI alerts, U.S.-based live agents help deter break-ins. Simply Safe, no long-term contracts. Save 50% on your new system with professional monitoring at simplysafe.com/Spotify or with promo code Spotify.
Outdoor deterrence requires a Simply Safe Active Guard outdoor protection plan starting at $49.99 a month. Visit simplysafe.com/licenses for alarm license information. Tennessee 2012.